this seems to work well. So here we
Oh no, I can hear you
are.
perfectly.
Awesome. Awesome. Well, thank you so much for hopping on.
Oh, of course. Like I
Uh,
said, I love doing this stuff.
yeah.
Food is
Yes.
so
And
bright. Is there a way to turn this thing down? I just got this. Oh, there we go. Oh, good. That's so much better, I think. Yeah.
yeah. Yes. So I wanted to have you on and just have a kind of a candid discussion about the lending world in Georgia and South Carolina right
Yeah.
now and what that looks like for our buyers that may be scared to get into the market, scared to buy because of interest rates and so I just want to dive a little deeper into that.
Yeah. Fire away. I am here and ready.
Awesome, awesome. Well, I want to thank Matt for coming on. He is an amazing, amazing lender with One Real Brokerage, licensed in Georgia and South Carolina, and my go-to for great loan deals that may be a little difficult to close, but he brings, the grit and determination that I love. So I want to know, a lot of people ask me, what's the biggest lie people believe about buying a home right now?
Oh, hands down, it should be a 20% down payment.
Yeah.
Hands down. And I don't even want to say lie because lie always sounds bad. I like the term misconception.
Hmm.
Because it is, I mean, if you have it, that's great, but it should never prevent anybody or scare anybody from at least looking into seeing where they stand. I mean, there's so many options. You can, depending on where you live, I mean, there's a lot of areas in South Carolina and Georgia that are USDA eligible to where you could do 100% financing. If you're a first time home buyer, depending on your income, on conventional loans, you can do a 3% down payment. And then FHA, regardless of if you're buying your first home, you're buying your 50th home, there's always a minimum of 3.5% down payment. So there's always opportunities to at least see where you stand to get into the market.
Absolutely. And you hit the nail on the head. It's definitely a misconception. And I think a lot of people just don't know. You don't know what you don't know, right? So I think it's important to have a good realtor and a good lender on your team to make sure that you're taking advantage of the best opportunities out there for your situation. And
100%.
so yes, absolutely. So that leads me into, do you think that in 2026 people are rushing to buy, or do you think it's a good time to buy right now?
I don't ever think, especially where we are, I truly don't think there's a bad time to buy. Especially South Carolina. I mean, I always do research. I'm looking up, finance numbers, things like that, and everything. The biggest thing that actually caught me off guard last week, as South Carolina per capita had the highest population increase of any state in the entire country. And that's comparing to
Awesome.
Texas, Florida, California, all the big ones. South Carolina was number one. So what that means for us as people that live here, people that are moving here, the sooner you buy, the better position you're going to be in, especially long term. You don't have to buy your forever home to start. You can get into a starter home, a starter townhouse, kind of get yourself in there, allow the property to appreciate, use it as a stepping stone to either build a portfolio, get into your forever home. But the longer you wait, the more property values are going to increase, taxes are going to increase, and every year is a missed opportunity.
Absolutely. And I always tell my buyers, you can always refinance your interest rate, but you cannot change the price. The prices are going up on
Correct.
real estate today, guys. So whether you like it or not, I know everyone's waiting on this massive, massive crash.
It's not
But
happening.
ultimately, absolutely. I mean,
It's not
properties
happening.
rise every year. Every year, property values rise, and it has historically over time. So, let's be smart about this. Definitely buy before you're priced out and you miss that opportunity, like he
So
said. So
a crazy stat for you. In the last 53 years, there have been 2 years where property values did not increase, and there have only been 4 years, which obviously was after the 2008 crash, that property values actually dropped. The other 47 years, property values increased.
Yeah, yeah. That I mean, that's wild.
Yeah.
It's wild. So it's so funny because when I hear people say, "Oh, I'm just waiting until that time," I'm like, "Honey, you could be waiting forever."
Yes. I mean, and that's the thing. There's too many protections in place. People have way too much equity now, especially
Right.
after COVID, to where there's too many safeguards built in to prevent something like 2008 from happening all over again.
Absolutely. Absolutely. I mean, they learned their lesson from
Yes.
2008. So I just can't foresee that happening again. Well, what's something that lenders wish that buyers knew?
Don't buy anything where you're in the process of purchasing a home. It is the biggest thing. I've seen, no lie, I was at a closing for one of my buyers. They pulled up in a brand new BMW. And I'm
Oh,
like, oh no. I walk up, I'm like, please tell me you didn't finance this. And thankfully they're like, no, like you gifted to me. Like, my name's not even on it. My parents got it for me. I'm like, thank goodness. But
right.
it is one of the biggest things that can impact you even after closing, because lenders
Mhm.
can do what are called post-close audits, and they have
Mhm.
the legal right. They can re-pull your credit one more time within 30 days of closing a loan, making sure there's no new debt that's been extended or wasn't disclosed. And if there has been and you don't qualify anymore, they can call the loan due.
Yeah. Yeah, and who wants to get all the way through this process, y'all? Like this process can be very stressful, very tedious. Like it takes a while, 30 days, 45 days. And even when you're working with amazing guys like Matt who can close in potentially 15 to 20,
Yeah.
you have put so much time and effort and gathering documents and going through this whole process, searching for homes. That alone is,
Yes.
exhausting. So, and then to get to the closing table and you can't close because you made a rash decision. And I can't count on two hands how many times people have told me, "Well, I just co-signed." And
Yeah. You
I'm
still
like,
put your name on
well,
the dotted line. You still have that
yeah,
financial responsibility. Yeah,
right,
that is
absolutely.
the biggest thing.
Yes, I would agree. And can you really buy a house with little to no money down in South Carolina and Georgia? Because a
Yeah.
lot of people they're like, I don't believe that. I don't believe that you can. I don't believe it's for me. It's possible for me.
So I mean, a lot of it comes down to where you live, what kind of down payment assistance programs are available. It's like here, like we work with ones that, and it's there's gonna change, and it's gonna vary based on a person's qualifying factors, credit scores, that's income ratio, things like that, and everything. But like we have ones where we can help you get the full 3.5% down payment on FHA loan covered. They're typically done through grants or what are called a silent second mortgage, meaning there's no interest accruing, there's no payments being made. And depending on which one somebody might qualify for, they can be forgiven in 6 months, 3 years, 10 years. So there's still, even if you don't have the money to actually cover the down payment, there are grants and opportunities available. And knowing how great you are at your job, that's kind of where you come at this on the back end, when you're negotiating with the sellers, is there are seller concessions that can be requested and asked for to help pay some of those closing costs.
Absolutely. There are so many options out there, guys. And it's one of those things that if you don't ask, you don't know.
Yep.
But definitely don't assume
Yeah. You
because
know what
that's what
happens
we're
when you
here
assume.
for.
You know the school age adage. You know what happens when you assume, and like you say, that's what we're here for. Like we want to take that uncertainty out of it.
Absolutely, absolutely. And being licensed in Georgia and South Carolina, I'm newly licensed in South Carolina. So Matt has been walking me through those nuances. But I am licensed in Georgia and South Carolina. Matt's licensed in Georgia and South Carolina. And so whether you're moving from Georgia to South Carolina or South Carolina to Georgia, or moving from anywhere else into one of these two states, I mean, we would love to help you. So, what is the number one mistake that gets buyers denied after pre-approval?
If typically, if it depends, like, it depends on the buyer. A lot of times, like people don't really understand, like even if there's not a mortgage on a home, they still have to disclose it. If there's certain debts that you haven't, if you have private debts, they still have to be disclosed. That's typically the biggest thing that we run into sometimes, is that not all debt is actually disclosed. Alimony, child support, like we have to know all of that because those are still legal financial obligations.
Absolutely, absolutely. I mean, and it's funny because the times that people may apply and they say, "Oh, I don't have that much," but you don't realize that, hey, guys, we're going to pull your credit so we
Yep.
can see it. Even if you don't tell us, doesn't mean that we won't know.
Yep. We're going to find
Because
it's going to be found.
right, absolutely. So I want you to break this down, like in layman's terms. I want you to break it down as far as you can. Like I'm 12, like we're right with crayons over here, Matt. So break down the difference between FHA, VA, and conventional.
The easiest to start with is VA. So that is designated for our veterans, service active military members, or a spouse of a deceased veteran who passed away from a service related injury. So that's the easiest to explain, hands down, the best loan program available. And it should be. Our veterans literally sign their life on the dotted line. That is the least that we can do as a country, is give them a phenomenal loan program. For FHA loans, probably my second favorite loan program. A lot of loan officers aren't going to say it. I love the FHA loan, both short term or long term. FHA, is backed by the Federal Housing Administration, government entity, and it's nice because it's a lower down payment requirement, lower credit score requirement, and it actually has a higher what is called debt to income ratio allowability that makes it easier for people to get into a new home. And then on conventional, those are backed by Fannie Mae, Freddie Mac, the two government entities, and they're good loan programs. So if you are truly doing a 20% down payment.
Right, right. Well, that's a great explanation. I appreciate you breaking that down for me. So, and now that we've explained the three of those, there's one product that we kind of forgot, and that's USDA.
Yep.
Who actually qualifies for USDA loans in Georgia and South Carolina?
So you typically do have to be in a designated rural area. Really nice thing is I have access to the USDA database, where if somebody finds a home, Matt, is kind of rural, I don't know, always, provide the address of what you're looking at. And it can quite literally be the difference of across the street. No lie,
Hmm.
I had somebody looking at a house right across the street, USDA eligible. The side that they were looking at isn't, unfortunately. And it just comes based off of the USDA parameters of, what is considered rural in their eyes, what isn't. And then, I mean, outside of that, anybody can qualify as long as they fall under the income thresholds.
Okay. Okay. So how crazy is that for the neighbor's house to be qualified in the house across the
It
street?
blew my mind. They're like, you gotta be kidding. Like, you gotta do something. I'm like, I'm not the USDA. Like, I don't set, the parameters and, the lines and
Right.
everything. I'm like, we have to go off of what they say. And quite literally, it was like 200 feet.
That is crazy.
Yeah.
Probably one of the wildest things I've heard. So, what loan programs are perfect for first time home buyers? I know that you mentioned FHA, but is that really the best one that's out right now for first time home buyers?
In my opinion, yes, because like I say, like, and the biggest thing it comes down to is the seller concessions opportunity. So, as a true first-time buyer, depending on your income, conventional loans, we have what's called a home ready program, 3% down payment, a little bit of a better interest rate than what somebody would qualify for if they don't have a certain income limit. But the seller concessions are capped at 3%. So $3,000 for every 100,000, in regards to the purchase price. FHA, it's double that. The interest rates are lower than conventional loans. The minimum down payment is only 0.5% higher. So it's not a significant increase in the down payment. But being able to go from $1,000 to $2,000 in seller concessions for every 100,000 that you're purchasing with, is a huge selling point for for potential buyers. And also long term, refinancing an FHA loan as rates drop is 100 times easier.
That is a great point. definitely take advantage of FHA, especially for all my new home buyers out there, because it is a phenomenal program.
Yes.
And like he said, it provides so many perks and so many benefits to you as a first time home buyer. And if the seller can contribute a lot more using that program, why not, take advantage of that opportunity? And
Yeah, those
so,
are times where I've had people getting down payment assistance and the max seller concessions, and they have, as rare it is, they have gotten money back at closing
wow.
because everything was covered. Yep.
That's crazy.
Yeah,
That's crazy. But that's amazing. That most people don't even know that that's a possibility,
exactly.
and that those other programs are out there as well, and that you can layer those programs. You don't
Yep.
have to just choose one. So that's awesome. So tell me about the um, buy down rate. So a lot of people are wondering, should I buy down my rate or should I get seller concessions for closing costs? Which, in your opinion, which do you feel like is most valuable?
So are we looking at permanently buying down the interest rate or a temporary buy down? You knew I was going to
So
throw a
let's
curveball at you.
let's dig into the difference, because I don't think a lot of people know the difference.
Okay.
Like when they hear buy down rate, they just automatically assume it's for the full term of the loan.
Exactly. And that's why I always like to, get the kind of differential point out there. So I right now in this market am not a huge fan of permanently buying the interest rate down. It's very expensive in this market and it's not going to save anybody a ton long term because realistically, in average right now, the average buyer is in their home or loan currently for about 5 to 7 years. So that means depending on how much you pay to buy the interest rate down, if you don't recoup that within 5 or 7 years, you're actually costing yourself money. And that's where the
Right.
temporary interest rate comes in. Because that's a phenomenal opportunity where you could typically buy the interest rate down for a 1, 2, or 3 year period. So we'll use like the most common one is called a 2-1 buy down. So, and this is just for educational purposes. I'm not advertising interest rate. Going to throw that disclaimer out there.
Of
But let's
course, of
say
course.
somebody qualifies for a 6% interest rate. On a 2-1 buy down, the first year the payment would be based off of 4%. The second year would be based off of 5%. And then year three forward, it would be based off of the fully qualifying rate of 6%. And that is a much, much more advantageous way of using seller concessions to finance that than permanently buying the rate down.
I would agree. I would agree because, a lot of times people just automatically hear, oh, my rate's cheaper buying it down, but they don't think about, the terms that it comes with, or, that it may come with, some other hidden cost that you don't think about up front. So
Yeah.
thanks so much for breaking that down for us, for
Yeah, because
explaining that.
that's a big thing. Like, and I get it. Like, people are very interest rate focused in this market, and I 100% understand it. But we should be more focused on the payment. If we can find you a house at the payment that you're comfortable with, yes, we don't want you to have to pay 8%. But if it's a respectable rate, we're making the payment. We're making the payment that you want. That's what's important. A lot of times, people just see an interest rate, they see the cash to close, and they see the payment, and they're good to go without truly understanding the cost associated with it.
Absolutely. And speaking of extra cost, let's talk about taxes and insurance,
Yes.
because those have gone up over the years. So I'm just curious, are property taxes and insurance affecting the buying power for buyers in today's market?
Yeah, unfortunately, I mean, there is no way around it, especially since COVID. We've seen property values, increase quite a bit, which obviously, as property values increase, taxes increase with it. And then we all hear about global warming, and we're in the low country. Well, I am in the low country in Charleston, and we
Right.
have had some big storms roll through Georgia, South Carolina the last couple of years. So we
Yeah.
have seen increases in homeowners insurance premiums, things like that, and everything. But it's not compared to like Florida. Florida's insurance market is just absolutely crazy because I am licensed in Florida as well. So I get to kind of see the good and the bad, down here along the coast and everything. but it's not nearly, as impactful to where it's, preventing people from being able to buy a home.
Okay. Okay. Yeah, I noticed like after Helene,
Yeah.
people, I mean, it was a huge impact
Yes.
on this area. And so everything skyrocketed. People complained about higher payments and, how they were impacted with repairs and
Yep.
having to, I saw trees cut through homes like butter.
Yes.
And it was insane to see. And the day after it happened, I was actually headed down for my grandmother's funeral to Florida. And I was started driving through Augusta, and it was like a war zone. It
Yeah.
was crazy. The amount of trees that were down, and it was just like everything was shut down, no
You
power
almost
for
don't
weeks.
recognize it.
I know. It's almost like, I mean, you feel like what it's like and I've never lived in a third world country, but it seems as though it's like, okay, everybody's scrambling,
Yeah.
there's no gas, there's no food, there's no power, and everybody's panicking and it was just it's something that you don't wish to go through too many times in your lifetime.
Correct. But I mean,
But
but the nice thing, with taxes and insurance is, as the homeowner, you can always shop for new insurance every year. Like, that is your right
mhm,
that you have. You get to pick your homeowner's insurance company. And same thing with taxes. You don't always get to shop them, but you can dispute them. And that's where having an awesome real estate agent like yourself, if something
right.
does come up, something crazy happened with the increase in property taxes, having a good resource like you is a great benefit, and nice, to have in your back pocket to kind of understand how to go through that dispute process.
Absolutely. I always say that that relationship doesn't end once you close on your house. And
No,
it's a
but it really
lifelong
just begins even
relationship.
more. It's a second relationship.
Absolutely. Absolutely. Because when you think about, not only the amount of times that you purchase a home in your lifetime, even if it's your forever home, you still will always have your realtor in your back
Yeah.
pocket, your lender in your back
Yeah.
pocket to bounce ideas off of and ask questions for things that may not be readily available.
Yeah,
And
'cause like you
and
said,
there's a
and that's where it really like comes in for us, because like once you close, it's not like, oh, Matt's done, I'll never talk to him again. We're gonna start tracking your interest rate against the market. We're gonna make sure we keep you in the best position possible.
Most definitely, most definitely. So, in this region, what is one of the hidden costs that buyers really don't expect that you see
HOAs,
in this area?
HOAs. It's the biggest one, hands down. And it's crazy, like the
Hands
way, and I don't want to say
down.
like hidden, because like it's,
Hmm.
definitely disclosed. But I mean,
Yes.
HOAs can range from, $120 a month to,
Mhm.
there's some here in Charleston almost $1,000 a month.
Yeah.
And that's kind of like that can easily make or break somebody, in regards to like qualifying for a specific property. Because like that's when I always tell people, like when I'm giving them some kind of estimates to understand, their payment, their rate, their cost, their cash to close and everything, is I always kind of put out the disclaimers like, make sure like, we're leaving some room for potential HOA, or if you're looking in
Right.
an area with the HOA, like let's get an idea of what those are going to run monthly, so we can make sure we have that factored in up front and make sure you are truly good to go.
At 1000%. 1000%. Because a lot of people, like you said, it is disclosed. And with a good realtor and lender, I mean, that they're going to tell you about those things up front. And you would hope that they tell you about those things up front. We do. But what I will say is that, it's always a shock. It's always a shock to people. So yes, I 1000% agree with that. So tell me about a deal that almost fell apart and how you saved it.
So I actually have a very good story behind this one. So as a buyer in Massachusetts, was actually looking to purchase down here, relocate his family because he was prior military, he was a pilot and everything, and he didn't have the opportunity to actually sell his home. So like we have what's called a buy before you sell program. where we were actually able to get him a all cash, no contingent offer on the sale of his home. We were able to exclude that from the debt to income ratio to get him the new home down here. And then he had a year to actually sell the home up north. So while all that was going
Mm.
on, his mother-in-law was actually kind enough to kind of gift him the down payment, the closing costs, and everything. She unfortunately was working with a bank called, I'm not going to drop the bank name, but the bank wasn't doing a very good job. So they originally told her about 4 to 6 weeks to close the loan. 6 weeks in, like she called me, Matt, like they're not giving me any updates. I don't know what to do. Like this is going to cost them the house. I told him, like, call them, give them my first and last name, who I am, tell them I have authorization to call on your behalf.
Mhm.
She did that. I called, waited for 45 minutes. Like, I'm not getting off the phone until I connect with them. Finally
Right.
got somebody on the phone. They were like, we don't have authorization to let you talk. I'm like, I'm going to call her, going to get her on the phone so she can confirm her identity, give you the last four of her social. We did that. Finally got them to say, like, oh, we're another 6 to 8 weeks away from closing this. I'm like,
What?
what? Yeah, that literally that. I'm like, what? I'm like, do they know this? They're like, well, yeah, it takes us 12 to 14 weeks to close a HELOC. I'm like, they were under the impression 4 to 6 weeks. And they're like,
That's
oh,
wild.
no, like, we're not even close. I'm like, why is it taking you 3.5 months to close a HELOC? I'm like, I'm a mortgage broker. I can get this done in 3 weeks. And they
Yeah.
just sat there in silence. I'm like, well, I appreciate the update. I'm going to call them. We're going to take care of this from here. So called her. I
Really.
already had like her application because she was originally going to co-sign. Ran her all of her information through the system. We were able to do a refinance for her with no appraisal, better interest rate than what the bank was offering her as a customer. Got that done in about 2.5 weeks. Got the son-in-law closed a week and a half later.
Amazing.
Yeah.
Amazing. And I don't think people realize how important it is to have a good team, y'all,
Yes.
because it is crazy. It's crazy the differences. Now these are both, it's a bank and then you have a lender, right? Who both can have products that can assist you with this HELOC. But these are two totally separate or different experiences.
Yeah.
And one of them sounded like it was extremely stressful to
Yes.
have to go through. And there's not a lot of people, guys. I mean, I try to surround myself. I build a good network. So because I know how I work, and I only work with people who communicate, who have our client's best interest at heart, and who make sure we're going to do whatever it takes to get the job done. There is no in this situation.
You nailed it.
There
You nailed it. And that's the biggest
and
thing. Like, it's never no. It may not be a not right now, but this is what we need to
absolutely
do. And
right,
not and this I'm just being honest, like not everybody is that, what we call like a paper buyer. They don't have a 760 credit score, they don't have a 20% down payment. But
right,
it's also about being a problem solver. And not saying a problem in a negative way, but trying to think outside of the box to find a
for
way to make
sure.
it work.
For sure. Have no idea how many people come to me and say, I've been told no. I've been told no. They just told me I'm not the type of person that can get qualified. I'm not the
Yep.
type of person that can buy a house. And do you know how discouraging that is to hear that from
Very.
somebody that it's not a possibility for you? And I just don't believe in that. I
Me
feel
neither.
like you said, it may not be the right time, but if you listen to us and you follow the steps that
Yep.
we give you, we will get you ready. And it may be 12 months, it may be 6 months, it may be 18 months, it may be 2 years,
Yeah.
depending on
But there's always a
how much you
path.
dug a hole. Right. But there's always a way.
Yeah.
There's always a way.
Like I helped
So
somebody in an FHA loan with a 540 credit score and got him a house.
yes,
Yeah.
that's amazing. That's amazing. And people think, that you shouldn't be able to get, like, people don't get things under a 680. Though they think you have to have a 680. And that's just not true. In all cases, it, of course, it depends on your full profile.
For sure.
But like you said, there are some instances where you can have less than a 680 and
Yeah.
still qualify.
Like you said, it's all
So
about finding that team that'll advocate for you.
absolutely. Absolutely. So, one of the last things I'm going to kind of dig into is, should buyers pay off their debt before applying, or is it better to keep cash on hand?
So it depends on what you mean by cash on hand. So big lending, no. You never want to actually have what we call mattress cash, like our grandparents probably did. They literally kept money under the mattress. You
I know
always
mine
want to
did.
keep, yeah, oh, for sure. I would tell you, I know my parents did, or my grandparents did. They had it in coffee cans, they had it everywhere. But you always
Right.
want to have your money in the bank because we do have to source it, make sure it's coming from a legitimate source. But when it
Hmm.
comes down to actually paying down debt, prior to buying a home, it really depends on the amount of debt, the type of debt, and what the time frame is. Because a lot of people think, oh, I paid $2,000 down on my Chase card, my credit score is going to go up tomorrow.
Right.
Unfortunately, it doesn't, happen that quickly. There are what are called credit reporting cycles. Each
Right.
bank, each credit card company reports differently at different times of the month. Some of them only report bi-monthly. So it's always good to be, about looking into numbers, in depth to see if it's truly going to make, any real impact in regards to, paying some debt off or paying some debt down.
Yes, absolutely. And it's one of those things, like you said, I've had people come up to me, or I say come up to me, but call me and say, "Hey, I've got $50,000 cash and I need to get a loan for
Yep.
the other, you know, what can I do with this?" And I'm like, so let's talk about a little more about that now that you mentioned it. So if they have cash in hand, they don't trust the bank. They may have a bank account, but they do keep quite a bit in cash. What's your best recommendation for how they season those funds, or how long they need to be in a bank account?
So they do have to be in a bank account at least 60 days. So it's called what's called like sourcing a large deposit. So typically, any large deposit over 50% of the buyer's gross monthly income, we do have to source. So they're definitely going to have to get the money in the bank. I would just put it all in the bank, put it all in at once. And the reason I say it is there's a lot of requirements that banks have to follow and report. There are SRAs, or sorry, SARs, suspicious activity reports. Any deposit over $10,000, they do have to, at least put a note in the file in the system and things. Even if you try to break it up into, 10 $5,000 deposits, they're going to notice it if you don't have those typical deposits done to your bank account on a regular basis. It's called layering. So there's no real way to kind of work the system that way, unfortunately. It's just, put the money in the bank, explain what it is, where it come from, be up for, be upfront, be honest. Let it sit there for 60 days and we're good to go.
Perfect, perfect. That's a good point. So one of the last two segments I like to do is I like to do a MythBuster question, because there are a lot
Oh,
of
I like
there's
this.
a lot of misinformation on the
I like
internet,
this.
and then also the next question is going to be a fun personality question because we want to get to
Okay.
know you.
I love this.
So the myth is oh my goodness. It is about checking your credit. Does checking your credit hurt your chances of getting pre approved or approved for a home loan?
So am I checking as a consumer myself, or am I talking to somebody to have them check it for me?
So you're checking it yourself to see where it's at, to
Okay.
stay on top of it. And people think that if well, if I check my credit, if I pull my credit, if I monitor my credit, that it may impact me. So I stay
Stay
in the
away.
dark.
Stay the,
I
yeah.
stay in the dark.
Yeah. No, so that has no impact at all. There's Credit Karma, which is a free credit reporting server or free credit service. God, I mean, Discover, Bank of America, Chase, Capital One, they all provide you credit scores on your, typically on your monthly statements. every consumer is entitled to one free credit report each year from all three main bureaus, Experian, Equifax, and TransUnion. You could literally go to myfreecreditreport.com and get a copy of your credit report at no cost with no impact.
Absolutely. I always give my home buyers, my home sellers, even those sites to continuously monitor. You want to know where your credit is.
Yeah,
You don't want to be in the dark and then get to, what, and then apply. I had no idea these
yeah,
things were on my credit and they were, you know, and that's why you monitor it, is to
yeah.
make sure that you don't have inaccuracies on your report. And so absolutely, it's not going to hurt you if you use those resources that Matt mentioned to monitor your credit. And it's advised,
Yes,
actually,
it is a better
to
safe than
know.
sorry. It's a better to know than not to know.
Absolutely, most definitely. So let's talk about you, Matt. If
Let's
you
do
weren't a
it.
lender, what would you be doing?
What would I be doing? What would I want to be
What would
doing?
you be doing? What would you want to be doing? Where would you be? Would you be in this country? Would you be out of the country?
I,
Would you
I
be
would
flying? Would you fly
definitely.
a plane?
I would probably be in the military.
Oh,
Like that is
okay.
something I always wanted to do. I always wanted, because I do come from an army family, so I did always have interest in the military. But I do have asthma, so that always made it a little bit harder.
Me
If
too.
if I wasn't doing this like outside of the military, I'd probably be owning my own restaurant.
Really?
Yeah, so I
Okay.
love to cook. That was like I was running my own kitchen at 18.
Hmm.
So I mean everything from seafood to stews and steaks and all that. Like I absolutely love to cook. Like that definitely is a passion of
Ah,
mine. And even doing this now, like I still there's days I want to get a food truck.
really? You
Yes,
should. You
I
definitely
would.
should. And
I
don't
would
tell
love
me
to have a
that. I
food
love
truck.
seafood. You should listen. I will come wherever it is. I'm a foodie at heart, so I love
We all
trying
are.
great food. Yes. So, what is your I would say, what's your favorite coffee? What gives you the most energy? Are you a coffee drinker? Are you a tea drinker? Are you more of
I'm
a energy drink guy?
So I think I drink just coffee out of habit. So I'm a crazy person in a good way. Anybody that sees this is good crazy. I'm up at
Yes.
2:30 in the morning every single day during the week to hit the gym.
Now that's
That is my
crazy.
energy. Yeah, like I'm at the gym by usually like 3:30, 3:45 in the morning. And like that's
Oh
my
my
energy
goodness.
because I feel 100%. Like I can go for hours. I guess like I've been up for what is it, 15 hours at this point. For me, it still feels like I've been up for 3 hours.
Oh
But
my
I
goodness.
do still drink a iced coffee every morning because like I said, I think it's just habit at this point.
Right. Probably so.
Yeah,
Probably so. Your body doesn't need it, but I think it's the crave for
yeah.
sugar, maybe
Oh
with the
no, for
iced
sure.
coffee. But yes, 2 o'clock in the morning workouts would never see me.
Yeah, people are like,
I
"Are you
struggle at
serious?"
5.
I'm like, "Yeah." Like 2:30, my alarm is going off. By 3:30, I'm usually out the door.
Oh my goodness. That is crazy.
It
Yeah,
is. That's
I
why I
I
say it's
think
a
it's
good
great
crazy
though.
though.
It is a good crap. I mean, if you're going to be addicted to something,
Yes,
2 o'clock in the morning workouts is not the worst thing to be addicted to.
exactly. There's a lot worse things at 2 o'clock in the morning we could be doing.
Most certainly, most certainly. So, what is one thing that instantly makes you excited about a deal?
No, oh, so there's two. There's a tie.
Hmm.
So helping a veteran and helping a first-time home buyer. Like
Okay.
I said, like
Okay.
coming from an army family, like there's always going to be a place in my heart for helping a veteran, and an active military member. But at the same time, like there's that same joy and appreciation of being able to help a first time buyer.
Right, right. It definitely holds a special place in your heart. Like I said, that relationship, it starts, when you first meet us. But, being in the CSRA and the Augusta market and in South Carolina, there's a lot of military on this side,
Yes.
um, this side of the South, I like to say. And so it's a joy to be able to help a military family. It's an amazing thing to be able to help a first time home buyer achieve the home ownership that they didn't think was possible. So I would agree with that, and it attests to who you are as a person, and I think that's quite amazing.
Appreciate
So
that.
yes, yes. Well, thank you so much for coming on. It was an absolute pleasure talking to
Oh,
you and
my
getting to
pleasure.
know you today. And as always, we'll see you at the closing table.
Yes, ma'am.
Thank you.
You have a good one.